Kids today have no idea about driver's license, let alone driving a stick. They'll never find where reverse is on three in the tree. All right, let's talk about it. This is the real story with Adam and Sherry. I'm Adam Hamalian,
I'm Sherry Hutchens.
and this is where two broker associates with 35 years of experience in Contra Costa County talk about all things real estate. Hey, Sherry, how's it going?
Hey, Adam. All good. How are you?
I'm good. It's been a busy couple weeks.
Yes.
Spring market has happened, and
Yes.
it's nice to be part of a brokerage where we get to collaborate with our partner agents, and a couple of them came and helped us price a house in Orinda. But one of those agents, they gave us a new title. What was that new title?
She said that we're becoming Rossmore experts.
I never dreamed of being a grumpy old man, but here I am killing it. No, actually, that's not true. Rossmore agents are really great. But
Uh-huh.
uh,
Yeah.
sometimes they get a little prickly when people who don't understand the Rossmore market jump in and they make things more complicated than they need to. And leaning on people that work in Rossmore regularly is really helpful. So, how do you think that we ended up being Rossmore agents for our brokerage?
Do you want the real story? What I really think about it? Or do you want?
Sure, sure. Tell me the real story, Sherry. What does that mean?
I think it's because our broker thinks we're old and only old people work in Rossmore.
Well, we're not even the oldest people in our brokerage. There's tons of
Well,
people
I
older
know,
than us.
right? Actually, I think what really is the case is that you and I have probably done more work in Rossmore than most agents in our company.
Yeah.
I've done quite a few listings over the years and sales there, as have you. And so it just naturally, when she's got somebody who's looking to move or sell, she thinks of us. So that's a good thing. That's why we have three listings there at the moment.
Yeah. We usually do a couple a year, but I think that we're going to probably do five or six this year.
Yeah.
I think I'd like to move the Rossmore, but my wife never would. But maybe it's because I want the discounted golf.
I never want to move to Rossmore.
All right, fair enough. Actually, and that kind of brings us into today's topic. Our guest for today is Martha Echols, and she is with Mutual of Omaha with the reverse mortgage department. Hi, Martha. How are you?
Hi, Adam. Hi, Sherry.
Hi there.
It's so glad to have you join us today. I think that ironically, when we reached out to you to be part of the podcast, it was in response to a non-Rossmore conversation, and so we'll talk about the fact that reverse mortgages are good everywhere. Well, maybe not everywhere, but not limited to Rossmore. We have a client who has a reverse mortgage on her house, and but she needed to do some work, and so we had a conversation with you so that we could understand about how it works, so we could help her make some decisions about her housing need. So in that conversation, we realized how little we knew about reverse mortgages. So, first of all, why don't you tell us a little bit about how you got into
Mhm.
mortgage lending at all, and then specifically about reverse mortgages?
Sure. Thank you for having me. For 23 years, I worked in branch banking. I managed for a couple of large banks, bank branch, and I realized how seniors really would struggle financially. You know, they'd come and stand in line to cash that $35 check. They would come in and complain if there's a $2 fee on their checking account.
Hmm.
And because fixed income is a pretty terrifying term when life and inflation, everything takes over. But in 2002, I had a gentleman come in and explain the reverse mortgage program to my staff. And afterwards, I went outside with Oliver and I'm like, Oliver, I feel like this program is something I could really get behind. And he raised his hands. He's like, I don't even know if it works, Martha. I just started. Um, but 2 years later, he was so busy that he came to me and offered me a part of his territory. And so since 2004, this is all I've done. You mentioned Rossmore, and my office is right outside the gate of Rossmore. And I did my first loan there in 2005. It was scary. I mean, I was new. And Rossmore has a bunch of nuances and a bunch of different terminology where outside of Rossmore, you'd call it a homeowners association. Inside Rossmore, it's a mutual, the difference between a co-op and a condo. So over the years, just had some really great mentors who walked me through and taught me how to understand Rossmore, and have been able to help quite a few people. And now last year, Rossmore became non-warrantable, meaning most loans aren't available there. And right now, a reverse mortgage isn't available there other than the Waterford. So the Waterford's 300 homes. But I mean, just love having it so close where I can sit down with the clients and answer their questions years after they did their loans. So, yeah.
I didn't realize that you weren't even able to do condos at the moment. For those of you that have been paying attention to our conversation over the last couple months, Rossmore's overall master insurance policy was the way they bought it made it so that it wasn't 100% replacement if all of Rossmore was destroyed in a fire, for instance. And so lenders became anxious that somehow their 20%, they'd be part of the 20% that wasn't rebuilt. And there's other complicating factors to it, but that was basically it. And they made the decision to keep the cost down for homeowners there. Otherwise, their mutual, or their HOA type dues were going to escalate too high. So I didn't realize, I knew that you weren't doing co-ops. I didn't realize you weren't able to do condos currently.
As when Fannie Mae pulled out, so did FHA. And so FHA is the primary reverse mortgage offered in the country. About 95% of the loans are insured through FHA. But this month, I'm very happy to say that Mutual of Omaha has created and launched our own reverse mortgage that does not require FHA approval. Although many of the guidelines we still adhere to because that's safe and prudent lending.
Right.
But I'm working on to see if there's any possible way that Rossmore's insurance issue would be something that we could accept.
Yeah.
So we could go back and do loans because there's a lot of people struggling as the dues go up and the home and the everything goes up that are really, their equity or their largest asset is the home that they live in, and they really don't want to sell to move somewhere else. So giving them access to the equity in their home is what we do. So hopefully by the time this airs,
Hmm.
we have good news, but
That's
uh,
great. Well,
don't.
why don't you tell us a little bit about reverse mortgages and how they work? So my perception with this one client that we had was that she had equity in her house, but her living expenses, like you were just indicated, they are not fixed. And so she did a reverse mortgage. I'm not sure with who, and so that she could draw down a little bit of her equity each month to help her cost of living. And I think in her case, she might have also taken a lump sum to do a roof repair. So it might have both been Anne, but why don't you tell us what kind of a typical reverse mortgage is and then maybe some of the different options. And then I heard you say maybe you could use it to buy a home. So you can end on that too. So just
Okay.
what are some different options?
I've kind of gleaned over the years that the younger borrowers in the 55 to 70 age group, um, especially here in the Bay Area, still have a mortgage. They've bought multiple homes or they've refinanced over time. And so they have a mortgage, and trying to face the future of retirement and still being saddled with that mortgage payment. That's the most popular thing I do for my younger clients is refinance their mortgage, eliminate that mandatory monthly payment, and then they still get a statement for their mortgage from Mutual of Omaha, but they have the flexibility to make a payment if they want, but they never have to, as long as they live there, pay their taxes, insurance, and maintain the property. So suddenly it gives them breathing room where now they've eliminated a $2,500 mortgage payment, so they don't have to draw down their retirement as quickly, or maybe they can retire a little sooner instead of having to work a part-time job or worry about the stock market because they're not having to pull from their investments to make that mortgage payment to keep a roof over their house. They have a lot more security in retirement. And then my 70 to 80-year-old people, they still have things in life that they want to do, they're usually going and doing something or helping a child, or maybe if there's been a spouse that had passed away, then they'll start using the reverse mortgage in more the traditional way to supplement their income. And then my older clients in the mid 80s and beyond, I just helped a lady who was 100 years old in Mission Viejo. They are generally looking for, they have lived in their house for 30 years at least, and they have paid down their mortgage. So now they have significant equity. And then we turn around and they want to draw the money to pay for their in-home care.
Hmm.
And because they really want to stay there. But in each of those stages, we always have a conversation is, does your house really fit you?
Hmm.
And sometimes it does. So when it does, it works great. But if the home really doesn't fit them, if it's too big or too much maintenance or too many trees, or the neighborhood has turned and it's not where they feel comfortable, then I ask them, have they ever considered moving to another place? And that's a scary thought when you're older, because you don't want a mortgage payment again on a new place. Or sometimes, um, they really need to be closer to their family. So that's when we talk about, hey, did you know you could use a reverse mortgage to buy a home? And Mutual of Omaha, we call that a lifestyle home loan, where they make a large down payment, 50 to 73%, and then we finance the rest. And then when they get their first mortgage statement, they don't have to make a payment. And that ends up being a perfect scenario because they're in a house that you've helped them find that really meets their needs and it really fits their budget. And then they have that peace of mind of knowing that those two big things, their budget and their housing, are aligned and in good shape.
That sounds great. Sherry, did you have a question? I thought you were gonna.
Yes, I'm wondering about
Mhm.
when you're talking about drawing on the equity of your home. It sounds kind of risky to me. I mean, I go back to the recession where there were all kinds of things like negative amortization loans and interest-only loans. And how safe are these mortgages? Like, would you do one for yourself if you were the right fit for it?
I'm definitely the age for it.
Okay.
But and yes, I would. Um, but I haven't yet. I'm still working.
Uh-huh.
And but my mom did.
Oh,
Yeah, she was actually a realtor broker for 30 years. She worked
oh
at,
wow.
yeah, so she loves real estate. She loves working. Um, and I mentioned to her several times that, hey, mom, I can help. She would refer clients to me to help them. But then when it came time for her, she sold her house in Modesto, paid off her mortgage. She was 79 years old. So I'm like, oh, mom, you worked a long time, but she said she loved it. But really, she was working because she had a mortgage payment to pay.
Hmm.
Yeah.
So once she sold her home, she wanted to move to Roseville, where our family lives. And so when she ran up there, it's obvious home values are more expensive.
Oh, yeah.
And so what she did was she panicked and she was going to buy a mobile home in a
Yeah.
mobile home park, really nice there. But the dues were $1,055 a month and they didn't do anything. There was not even a pool. So I said, Mom,
Oh.
yeah, Mom, why don't you look at this beautiful home in Sun City, Roseville? And I said, with the money you have coming from your Modesto home, you can make that down payment. And then each month you have a mortgage statement, but no payment. And my mom moves quickly. So she bought that house and she's been there 5 years and she absolutely loves it. Um, it's a nice, safe environment. She's really connected with the people. It's 55 plus, so it's easy for her to
Okay.
make friends. But I sat down with her. I'm like, Mom, I know that all happened really fast, and I feel like, do you feel like we kind of pushed you into this? And she said, no. She said, I've been working as a farmer's daughter since I was 6 years old.
Oh, wow.
And I'm so glad I don't have to work anymore. She has small HOA dues and has to pay her property taxes, but she's so happy to have her independence, but also have the help of family nearby.
Yeah.
So it's been beautiful. And what we as there's four children, and so the four of us, we're so happy that she can keep her investments intact. And she hasn't had to spend that down. So if she needs care later, she's got resources. And also that we don't have to, I think she feels good because she doesn't have to rely on us four knuckleheads
Yeah.
to, to make those, to provide for her. So it's a win-win-win. If there's no equity in the end, but my mom had 5, 10 years of a happy, happy life, we're all okay with that.
Yeah. Let's talk about the equity at the end, because I think that, people have a misconception about how the reverse mortgage is structured, and then what does it mean? And I'm going to get kicked out at the end and all of that. So, want to dispel some of those myths. My understanding, and this is an invitation for you to correct me and educate it more fully, that when the reverse mortgage is set up, it's based on some actuarials on the person's likely longevity so that they would never really run out of equity in the house or come out to zero, and that they're not um and so just kind of talk about that, and then also the dynamic that they don't have to leave the house, but if they do move to assisted living, that might prompt the sale of the home. So if you could just kind of talk about those two, kind of the sunsetting of the reverse mortgage on the other side.
So the type of reverse mortgages that we offer at Mutual of Omaha may be different than other reverse mortgages. So specifically to our FHA insured reverse mortgage, FHA insures the loan and they limit how much you can borrow at the beginning. And because they know over time that loan balance will grow. And so they want to make sure that in the end, at your life expectancy and even beyond, that you still have significant equity in your home. Because if you don't, the mortgage insurance through FHA has to come in and pay the shortfall.
Mm.
So what that means is FHA would absolutely step in and pay any shortfall. So the homeowner won't be responsible, neither would their heirs. And that same consumer protection is built into our own proprietary Mutual of Omaha reverse mortgages, the non-recourse. So it's really important. Um, and in most cases, there's still as much equity as when you started the reverse mortgage, depending on if the home value goes up at least 4% a year. So it's all set up now that there's significant equity. But years ago, before FHA got involved, there were reverse mortgages that were not insured through FHA and did not have the same consumer protections. And with those original loans in like the 80s, the lender would actually go on title with the homeowner. So that,
Oh,
yeah, that meant when that home mortgage was due, the lender was entitled to 50% of how much the home appreciated.
Oh my.
Yeah, and I bought my first home in 1984 in the dumpiest part of Hayward. Um, and in 5 years, the value doubled. So there was huge appreciation here in the Bay Area, lots of lawsuits because of the reverse mortgages at that time. But under President Reagan, Congress voted in 1987 to create the FHA insured reverse mortgage. Does not allow the lender to be on title. We don't
Mm.
we don't get to share a part of their appreciation anymore. We're entitled to interest until the loan is repaid, which is like most mortgages.
yeah.
So this loan doesn't even show on a person's credit report. There's no personal liability.
Interesting. So the balance that's owed is a combination of the equity payments they've taken out and any interest on. So it's is that
Mhm.
right? So say it's $1 million house, and the reverse mortgage draws $2,000 a month off of that. So you would owe how many months you took 2,000 plus the incremental interest over that at the end. And so owner moves to assisted living or passes away, and the house gets sold. The loan is paid off, and the loan is basically that the accumulation of the principal and interest that's accumulated, and the rest of the equity goes to the heirs. Is that right?
Yeah, it's a little bit more complex because depending on which of the loan options you take, there could be closing costs at the beginning that are financed with the loan. So in the years to come, let's say you sell your house in 10 years, whatever the closing cost plus the interest are part of your loan balance.
Okay.
And so in the end, when you sell your home, that gets repaid. And the good thing is everybody gets a statement every month, so they know exactly where they sit.
Yeah, yeah.
And how much equity they have left is really going to be primarily based on what their house value is.
Yeah.
But never would they have to come up with any money if they owed more than what the house is worth.
If for some reason the house depreciated and they owed more than what it was, that's when the FHA insurance
Right.
pays the difference. All right. And there was one thing you told us the other day about the mandatory education about it. Was that part of the law under Reagan, or did that come later?
Mhm. Yes, it's part of the reverse mortgage requirements is that every potential borrower has to talk to an unbiased third-party counseling agency. So HUD, the Housing and Urban Development, um, has a long list of counseling agencies that meet the requirements. So that's important for someone to do that. And here in California, even after they've done the counseling session, there's a 7-day cooling off period because we really want to make sure that the homeowner fully understands it. I tell my clients, like, I want you to be able to go to sleep at night and not worry about this. So if you don't have a full understanding, I know you're going to worry.
Yeah.
Sometimes, they're just like, I trust you, Martha. Don't worry. You don't have to tell me. But no, I want you to know because you're gonna worry. So
Yeah.
counselors don't really care if they do a loan or not. They're just there to instruct and explain the loan again to make sure the loan officer has been, forthcoming with all the
Yeah.
details.
Yeah. It's interesting whether people trust real estate professionals right now is kind of an open question. I guess it has been for a long time. Um, and I almost wish that people would have to go to counselors before they hire a real estate agent, because we both, just like, there's people in the lending world that are hungry for sales and they maybe do shortcuts. I'm not going to cast actual aspersions on people's character, but the way that I know that you work with clients and you give them all your time and energy to make sure they fully understand it. The same thing for real estate agents. There's some agents out there that it's amazing the shortcuts that they take. And we hear, like, we're working with a set of buyers right now. They bought their first home like 20 years ago in Oakland, and they basically had no idea what they were doing. They got in the contract on the first thing they wrote on and didn't understand contingencies or insurance or undisclosed work. And so as we're sharing with them, they're like, "Oh, I didn't know that this is what agents were supposed to do." What? And Sherry, I didn't know this wasn't. I didn't know anybody else. Well, that's not true. We know
Didn't
people.
know it was an option not to.
Yeah, right.
Yeah.
Exactly.
Well,
Um,
I bet a lot of realtors are part-time, right? So
yeah,
they're not aware of the new documents, the new laws. And when real estate's easy to sell, they jump into the market.
yeah,
And when it's not, they go back to whatever else they were doing. So
Yep. So
uh,
true.
important for people to know who they're working with because so much depends on your experience. And you guys have a great reputation that, when you step to the table, and I love it that you're a team
yeah.
because that really helps them, those people that might connect better to Sherry than you, Adam. Nothing, no offense, but
No,
they get 2 for 1 is basically a pretty good deal.
well,
Yeah. Thank you.
what's interesting is that so Sherry and I have some overlapping sphere, but they're basically two separate worlds, and it's not uncommon for one of to come in to our business from one of our spheres and connect with the other person, and that's one of the best parts about our business when that happens, because the the trust and then it just seems to happen the way, and it's very rewarding that way.
Yeah.
Um, so with Sherry and I, we bring similar skill sets, but also different skill sets, and that's fun. Also, Sherry's been in business twice as long as I have. We won't count years. And I'm not going to say that I'm young, but I would when I think about you working for the Mutual of Omaha, I can only think of Sunday evening at my grandma's house after dinner watching Animal Kingdom with Marlon Perkins and Jim. I mean, everybody wanted to be Jim, but riding on the front of that Land Rover with the lasso to catch the rhino. And one time, my family went on a vacation across the country to visit relatives in Nebraska, and we pull into Omaha, and I was like so excited. I've been waiting for this the whole trip. My face is plastered to the window. I am looking for all those animals from the Mutual of Omaha Animal Wild Kingdom, and there wasn't anything there. My brother's
Yeah.
laughing at me.
You were like, I've been lied to. Well, it's definitely a generational thing. When we were, young, the whole nation watched that, and then Disney,
Yeah.
and
Yeah.
a few weeks ago, I was talking to someone in their 30s or 40s and trying to explain, oh, Mutual of Omaha, Wild Kingdom, and they were just like clueless, right?
Right.
So many options for entertainment. Why would the whole world be looking at, one show? So it's definitely a generational thing. I'm glad that Mutual of Omaha Wild Kingdom is now on NBC. And also, we we still continue after 110 years to have the same values,
Yeah.
same look at business.
Yeah.
Super aggressive. We do all kinds of programs geared towards seniors, which is why Mutual of Omaha came and bought our former business that I worked with, because they knew the need for seniors to have access to their equity to have great outcomes, especially in times when the stock market gets a little shaky.
Yeah. Yeah.
People don't want us. Like one client told me, he was 81. He was so cute. He's like, Martha, my stocks are like my soldiers on the front line. They're working for me, and he gets his dividend at the end of the month. And I don't want to sell them. I don't want to
Yeah.
get rid of my soldiers. And whenever the values go down, it hurts a lot. So
Scary times.
Yeah. Yeah.
So as we're talking, I'm sorry, Adam, go ahead.
No, you go ahead.
As we're talking about this, I'm thinking of a couple of clients this might be a really good fit for them. And I'm wondering, what do they have to do to qualify? Do they have to be a certain age and things like that?
So the minimum age is 55.
Okay.
Minimum age for the FHA programs is at least one spouse needs to be 62.
Okay.
And I think it's most important that they understand. So I would explain things to them. We would help them get their counseling done. We would do a pre-approval process, which I really like here, that we do a full pre-approval. It's signed by the underwriter. All we really need is just the appraisal after that point. So everybody's confident that we can be able to, close that loan. And they're so excited when they get in the house that they love. I have a client right now selling his home in Rossmore and moving up to the foothills and a much bigger home, and very much looking forward to it, but did not want a mortgage payment on the new place.
Yeah. Yeah. All right. Good. Good to know.
And most importantly, the counseling, if I didn't say that already.
You did. Yes, I got that. So
Do you find that for Mutual of Omaha that insurance for your clients is becoming an issue, or I mean, I assume they need to provide homeowners insurance as part of their funding.
I think that's the same for any mortgage company right now. Insurance is so important that sometimes before they get into contract on that home, they've already sought out insurance to make sure the property can be insured. And that's key, because the requirements of the loan are that you keep your property taxes and your home insured, keep all of that up to date.
Do you do impound accounts for property taxes, or do you trust the homeowners to do that on their own, or is it a choice?
Well, part of the guidelines or the underwriting is just because that is so important, they pay them in the future. We have to go back to look to see what their payment history was for the last 2 years of their homeowners' dues, their taxes, their insurance, their mortgage. If they haven't been able to handle those things, maybe there was a one-time circumstances out of their control, we can get an exception. But if it's a pattern of they're just not really responsible to do that, then we would set up an impound. But in a reverse mortgage, they're not paying us every month to put money in there.
Yeah.
So our impound is means we're taking, let's say they were able to borrow 40% of their home's value, but maybe we're going to have to set 10% ahead aside to pay those future property taxes and insurance. So that means they have less they can spend, but they also have less to worry about
Yeah.
because taxes and insurance are paid for many years.
That's nice. All right. Any other thoughts about reverse mortgages that we haven't talked about?
Well, sometimes people think that you can outlive a reverse mortgage. And I'm not sure exactly what they mean, but you can't. As long as you live in your home, even if you had to go to a care facility, as long as you come back home from within 12 months, there's no effect on your loan. You could literally live there till you're 150 years old. It's in the contract.
Wow.
So it gives them the assurance of knowing the mortgage is never going to be due.
All
But
right. Hashtag goals, live to 150.
yeah, with the AI
Yeah, right.
in our science. So that's one thing. And the other thing is that you really just really got to make sure that house is a good fit. It doesn't have to be your forever home, but the reverse mortgage works best when you're in a home where you can live comfortably.
Yeah.
So that's that's
All
key.
right.
This has been so great. Thank you.
You were so fun, you
Yeah.
too. Really,
I
really appreciate this.
Well, we're
Thank you.
grateful that you were able to share with us and for our audience. This was the teaser that I said last week where we had to re-record something. So Martha's been very gracious to do this twice. Um, and it's been very fun to have you and to again learn a little bit more about reverse mortgages. I think that they can be a tremendous tool for people that A, want to age in place, or B, need to make a housing change, but cash flow is part of that conversation. And it just gives one more tool in the tool belt for homeowners to figure out what's their best situation. All right. Any other thoughts before we sign off?
No, just how much I appreciate you. Thank you very much for giving me the opportunity to explain it. Sometimes people are a little skeptic of it, but just come and call me and we'll go over it and I'll explain the details for them.
So we're going to put Martha's contact info in the show notes, along with Mutual of Omaha's information. If you liked our episode, be sure to like and subscribe it and refer us to your friends. And we look forward to seeing everybody next week. All right. Bye, everybody.
Bye-bye. Thanks,
Bye.
Martha.
Thank you. Bye-bye.